Hi, I'm Cathy McBreen, president of Millionaire Corner, and we are delighted to have here today Luke Knecht, one of the foremost leading fixed income portfolio managers in the country. Luke, who you will meet in a moment, currently works as a partner at Dearborn Partners in Chicago, Illinois, which is a SEC registered investment manager. Prior to that, he worked at Dresner RCM Global Investments, and prior to that, he was the chief investment officer at Harris Investment Management. Hello, Luke. We're glad that you're here.
Thank you. I'm pleased to be here, Cathy.
And what about currency? How does that impact bond investing? Is that a risk related to bonds?
Yes. In general, most people would never buy a foreign-denominated bond. They wouldn't buy an Italian bond or a German bond unless they were interested in taking some currency risk. Some sophisticated institutional managers might buy that bond and then hedge that currency risk out and go after the pure interest rate on the bond. But that's a pretty complicated approach for the average person to take. And I think that most people's bond holdings are probably centered on U.S. currency. If you want to bet on what the euro is going to do or what the yen's going to do, there are simpler ways to do it than to go out and buy a yen-denominated bond or an Italian bond.
Okay, so some of these struggling European countries, Portugal and Spain, all of those countries are issuing bonds now, but that's not something that an
Well, if
average
you're
person
interested in that as a play, if you think that those countries are going to make it and their interest rates are going to fall, there are ways to take advantage of that through funds, and I'm sure your listeners can track some of those down through their financial advisors.
Okay.
But yeah, there are ways to play that if you've got a portion of your portfolio that you feel is right to expose to that.
Thanks again, Luke, and thanks for watching Millionaire Corner.